Becoming one with the algo.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. Bitcoin just trading in this ascending channel manner, basically catching this bottom level wick and bouncing off of the wick, coming back to that 0.65 and rejecting off of it as of this moment in time, closing out the daily candle strong. Do we continue higher on this Thursday, November 23rd, Thanksgiving Day stream? Do we continue higher or not? Let's go into High Block Capital to take a look at the liquidity. What is that? Well, people lock that liquidity into the charts to get burned to a crisp by the market maker for not using a stop loss. And we get to see where those crispy characters are, so let's do it now. So as we dumped down here, peeling out the liquidity on the longs during yesterday's stream, we were basically reaching a point where there was more shorts to long, 7 billion in long liquidity that they V-shaped into. They did a shallow retrace into some of these 100x longs and then ripped into that pool up at 37,774, $236 million taken.
Fatality.
Which is why you have to trim and pay yourself and set stops into profit as a practice. Trim and stop into profit. Trim, stop into profit. So you win even if you lose. And do we continue higher here? Let's go into the higher time frame. There are some pools that have percolated down below now at the 36,667, $250 million, partners in crime down below. So if they come up and clear that 38,215 zone, we could be seeing that continuation. It is midweek reversal Thursday. Do we continue to that path? They never took out any of these pools yet, so that is something to behold. As long as we are above this 34,668 level of the 236, there is still bullish undertones to everything here. Let's go into the higher time frame to check out the liquidity there. Shout out to everyone here. Okay, so on the 7-day we came back to this pool at 37.8 and 37.9. There was a pool percolating up above. After they grabbed this 35.8 region, they decided to come up and grab these $7 billion in short liquidity. And now it's chilling like a villain to try to see what is next. There is a little bit more above here at 38 on the 7-day. If we go to the monthly, you'll see more. The entire range up here having all single digits, so they're basically about 40 billion up in that 38.8 region. Starts to taper at 39k. Overall, they could be coming up into that high region now at this point. Overall draw once again to the downside at 34k. Surprising that they did not sweep that 34k region just yet. What is the holdup? I guess because of the Binance news, there's something to do with the CEO of Binance having to pay a large fine. So because of the bearish news, they decided to take out the shorts. If it seems obvious, it's not. So the bearish overtone of the Binance news was being used as a catalyst to grab their liquidity. So you have 15, 17, 12, 15 billion, 15 billion, 30 billion here at that 38.8 price point, 12 billion at 38.4, 12 billion 38.2, 8 billion, 9 billion, basically 38 even. So you have about $50 billion up in that 38.8 region on the 3-month time frame that we could be coming back to. Once again, the ultimate draw is to the downside, as you see this large liquidity pool down below in that sub 34K region. Do we come back after fatiguing off of some of that? At some point we will. All right, so coming to the 6 month, you have 23 billion 38.4, 21 billion 38.7, 13 billion 39 even. So they started to give the shorts a little bit of hope to percolate some pools, and they are going to possibly grab that up there. Going to the last time frame on the 2-year, you see 45 billion 38.8, and yeah, still threadbare up in these regions. Not very impressive. They already took out that large pool, everything on all these higher time frames, so there's nothing really keeping it here other than the draw of people wanting to cash out their positions as large players cash out on the liquidity, and they are in a holding pattern by the looks of it. The last time we had a holding pattern like this, if we go back in time, was back here in June. We basically held this zone for a good 33 days and then some, 60 if you include, or 55 if you include everything. But when we kept that range, it was basically about 33 days. So we've been rising in a manner here for the last 30 days, slowly ascending channel. If we look at where we've been stagnating, it's been for the last 13 days, or if you include this up candle, 14. So we've basically been inside of a channel here, range bound from these last 14 days, just basically distributing their positions. Perhaps we're banging our head up against this 786 at 37,750 and coming back down again. All right, so let's go into the charts and turn on the momentum and see what's up. Link is in the description for more, and we have that little coupon code to look out for. Tomorrow we will have a sale for lifetime and yearly members. So this is a feature. Scroll down to feature, toggle at your leisure, and you can see all the components that keep you glued into your nice trades in the dynamic alert system and stochastic array. Never before seen formulas yet to hit the masses. All right, so let's go into the daily time frame, shall we? So the daily time frame, I think the 3-day also closed once again strong above this adaptive, and now you have this massive, well, actually it closes in a day's time. We have this large wick possibly going higher here with that 3-day close in 23 hours time. So when this 3-day closes above this adaptive, this could be an SR flip, very different from March. Could be making its way up into these regions. I want to look, I was looking at one of the things we were going over for somebody before we signed off, which was Link. And I was talking about how Link, what you should look out for Link. I was talking about the cloud on the 5-minute. Kind of interesting how that played out. I was talking about how we were back here. I was saying we would come down, double bottom, possibly break out, hit this based on the angle of the cloud, and then come up to this pool. And sure enough, with Link, where did it go? It came right up to that liquidity pool. So that was pretty cool. Link for basically 6.35% gains. Litecoin, let's just go back to Litecoin for my man. Litecoin did come up to that pool, paused out, and then actually continued in the same manner Link did. Let's go look at what that level was that it did it at. It was an equilibrium level? No, it was a 382. It was a shallow bounce at the 382 of the retrace. So it bounced off the shallow region and continued, did not come down for a double bottom. It was a shallow bottom for Litecoin. But the move of coming up to that zone, which we did, and paused there and retraced and continued. Where was the cloud at that time? If we go to the 15 minute did kind of shift here. The liquidity is not as clean as Link, so the cloud is a little bit wonky in terms of that. The more volume you have in the asset, the more smooth the cloud will be. So this is obviously one that trades with lower volume, average volume 450k. If we go to the Link, just to compare, the average volume is 8.2 million, so it's a slightly higher trading volume, hence the cloud being a cleaner shape and easier to read. The cloud is volumetric in nature, so it's meant to be used on high volume assets, NASDAQ, Bitcoin, things like that. Can be used in altcoins, but ultimately something with higher volume, the higher the better. Okay, so Bitcoin, after the Asian range, we had the 5 time frames oversold, cross-up event of the 15, meandered around on the London session, came down during the New York session, and started to flip. Now, was there something you could have looked at on that time frame? Basically on the hourly, the fact that we held this cross-up event of the baseline and we did not break it, and also the angle at which this hourly cloud was kind of curving in a manner here. Still mighty thick for my liking, wasn't the best setup for my taking, but you did have shoulder, head, and shoulder trying to flip this to the upside. This was a shallow play. Let's go ahead and see what where we were. Yeah, again, a 382. I don't play the shallow dip and rips, but they happen. That's why I have it on here as a setting. Consider turning off your fibs to certain levels. We have the equilibrium. The basic has everything. You can go ahead and pause the video at this point. This is what we have. We have the 236, the 382, the 0.5, 618, 786, 1, 1618, 886, 65, 706. And in order to consolidate all these lines, we turn it to just having the equilibrium, the 0.5. We have the deep retrace zone, and then we have shallow for that 382, and then we have just the regular golden pocket. Generally targeting the golden pocket in the deep retrace regions. The shallow one is a YOLO play that happens once in a while, but not my normal play from my normal playbook. All right, so where do we go from here? Let's go see. So the daily time frame. Daily time frame baseline still kind of holding the price in this downward position. No insinuation of continuing higher other than possibly on a wick. If we go to the 22, actually wait, we didn't look at the oscillator daily time frame. Money flow coming beneath the RSI here, possibly wind up for a continuation move up into those regions. We've had price in since the weekend for those upwards paths, and the stochastic holding in a holding pattern beneath the oversold region. Williams also just below oversold, kind of ambiguously holding. 22 hours starting to get some upwards momentum. The cross-up event of the money flow also coming above the RSI, starting to sense that fatigue point perhaps. Let's go to the 12, try to see if there's something easier to read there. Hour time frame, getting a stopping volume candle, stopping volume being blue in nature, so this low volume up, and then that continuation candle for a stopping volume on the shorts. Still at an ambiguous point on the Williams, not my cup of tea for longing at premium levels. Here on the 6 hour though, you had some bullish divergence on the money flow. You had a basically hidden bullish by the looks of it, and now getting a stopping volume. The 6 hour cloud is still thin, so this entire region from here to here for the last 4 days has been a seek and destroy trading range. If you play the range bound play and you short the tops and you long the bottoms, you have been able to kill it in this range bound structure for the last 13 days, as we went over. So we broke the super trend and we're maintaining the bearish super trend level as of this moment in time, kind of getting ambiguous signals, no clear signals on the 6 hour. Going to the 4 hour. 4 hour had the RSI come beneath the money flow here, so this was one of those unique occasions where the RSI came up to the money flow on the 4 hour. Not getting significant volume in any of these candles. It's kind of decent, but nothing compared to the dump. So this dump was seller absorption into a drift higher. Starting to get overbought on the 4 hour time frame. The last bit can give you a little bit of a surge here. The hourly time frame. So now we're back to the hourly. So this hourly cloud starting to get thin here, possibly coming back for a retrace. Personally, I wait for confirmation on the moves. I don't try to snipe the bottoms. So confirmation play would be coming back to kiss that cloud. We talk about kissing the cloud as a confirmation play. What do I mean by that? Well, after you pass by the cloud here, it's rude to not say hello, so they come back and they kiss that cloud and then continue to the upside. So they get people induced into a certain mindset, and then they deep retrace into their stop losses, find a bullish order block inside this candle. There's a fair value gap here in the hourly. If you turned on this fractal break imbalance liquidity void free indicator, if you don't know how to find fair value gaps, and then you go to lower time frames to ascertain where that actually is, basically down to that 706 region. Even on the deep retrace region, you could come somewhere between that 706 and the 786, and it would not be strange to me. But basically coming down into that pocket for that continuation idea, frugally coming possibly to that 38293 region was where I would like to see it. It is Thursday. We have a short trading day today for the observation of the holiday, so I believe New York is off. Let me make sure about that. Let's go to trading hours for Thursday, November 23rd. Okay, so Thanksgiving Day has a double asterisk. The double asterisk is, where is that? They had I remember looking at it at one point. Here we go. Each market will close early at 1 p.m. So basically at the lunch hour, it will close. So be aware that after the London handoff, the market will be winding down for New York. So we are basically down a pool today. So it will be a different type of day today. So be aware of that coming into London. And let's go into basically the hourly time frame is the clear signal in the noise that makes sense with this cloud here. So the cloud is kind of shifting in a manner and looking for a possible retrace down into that pocket for confirmation. Don't like to buy at a premium, you like to buy at a discount. What that means is as the price goes up, you want to be selling. As the price goes down, you want to be buying at that discount rate. So looking for that confirmation order block play is the smart move to think if this is real. I'm welcome to take any ideas from if anybody has anything to look at. Looking at the total, it's doing very much. See how it's clean because it's dealing in billions of dollars. This volumetric cloud doing very much the same on the hourly. Possibly coming down to here and bouncing. If you take a look at that retracement zone, or we can basically take it from here. Equilibrium would be at that level. So the equilibrium for total 3, total broke through that hourly cloud. Baselines were holding. If we take these trend-based fibs here and we go like this, we're getting into that take profit region. So coming down into that zone. Bitcoin dominance. The dominance taking back some of this cloud here on the 12-hour, came back above, kind of meandering around, possibly considering going out of this range into the higher territory. Already wicked into that a little bit. USDT dominance came up to a point and then the people reinvested their dinero into trades. So we're coming back for that triple tap. We're going to remove this to start fresh. Already played out here. So the 12-hour time frame, overall in the 12-hour, starting to get this insinuation of possibly kicking people out eventually and coming to this region on the USDT dominance. Overall draw possibly coming here. This was a previous fair value gap region we ascertained on a lower time frame, so we left it there. But the 12-hour cloud, if it holds it, could be looking for more downside for as this price rises for the USDT dominance. It means people get kicked out into trades. So we're seeing this wackiness as they stop out the high leveraged folks on BTC. This means the very overall arcing nature of this 12-hour on Bitcoin is also one of those disconcerting looks for the move to continue. As it starts to taper and come to 3 o'clock, you start to see a pause in the action of price. pointing to 2 o'clock is where you start to see it continue and or hold the cloud and see it surge up. All right, let's go see what you guys want. Jason Casper live and stream your music playlist during his lives. Ah, nice. Yeah, his he uses the same copyright free stuff, I think. I like Jason. He's a nice guy. It'd be nice if he gave a shout out, but I understand he's already into Market Cipher and all that. He doesn't want to overextend, and he already has a community of built around that, so why would he risk doing something else? So I understand completely, but it'd be nice if somebody had a following, gave a shout out once in a while. I know he supported an indicator called the Nines, but that indicator was a little bit wonky when I did research on it. No offense to the dude who made it, but yeah, if you have anything you want me to look at, now's the time. We're winding down here on the thing of the stream. Yeah, coming back to a order block. This is a potential order block zone. If we have that in Momentum Master A, you can turn on Order Block Finder. It's one of those other features I don't really talk about that much, but we have order blocks here that you can flip into. Happens to be that golden pocket region. And of course you can use that on higher time frames, see higher time frame order blocks. Bearish order blocks up here. Bullish order blocks down here. If you know how to see them, you don't really need it, so I don't turn it on all the time, but there's a lot of stuff under the hood for everyone. Let's go see what is in the charts for you guys. What do you want? Great show as usual. Thoughts on Polygon and ETH. Polygon is Matic, right? Okay, so the things that I'm always looking at, just to give you a heads up, when you see these curvatures, it gives you those insinuations before the move. So technically back here, just to give you an idea how the Momentum Master stuff works, is back here you'd be seeing this angle like this, and this curving from 2 o'clock to 3 o'clock would be what you would be looking at. And then when you break that cloud, you'd be looking for the bearish retest to possibly continue lower. And then this is how you can insinuate these moves. And this was another confirmation kiss zone where we kiss that cloud, and it's the same fractal like nature on all things, where we break through the cloud, we come back, we kiss it, and we continue. And so this curvature of the cloud is what we look for that first insinuation of downside. So we're looking at this possible bounce off the equilibrium back here in November 12th. We got it up to our fair value gap region. This was the last we looked at Matic. It hit the profit targets. Where was this zone? Up here we were looking at some targets. It hit those targets and then some, came back down. We're going to clear this now. It's over, it's in the past. Bye bye. And now let's go to right now. And yeah, so you're starting to get that curvature here on the 12-hour. If we just take this and put it in a channel with a regression trend, if you're having trouble finding channels, consider using this regression trend over here on lines, favorite parallel channels and regression trend. You just need 2 clicks. It'll put it in a channel for you using whatever stuff occurred, and you can find the equilibrium within that, especially if it's range bound. It's quite nice. Looks like we're holding the 12-hour super trend from October 21st is still holding. The overall arching narrative of the trend cloud is starting to wane on the 12-hour. If we look at the daily, we came back to the daily cloud for the first time since the rip in October 18th. The rocket ship on September 9th had you at hello for this entire play. And that is one of the sleeper things and features of the stochastic arrays, the rockets and the nukes. So we are coming back down for a retrace on the daily time frame. If we do this retracement from the wick to the wick, we are currently at the equilibrium. Coming back a little bit lower down into the golden pocket is your confirmation region. So coming back into this pocket zone, possibly breaking this trend cloud on the daily. We already broke down with the candle beneath it. This could be your bearish retest, continuation idea down beneath the cloud. The angle in which this daily is starting to taper, suggesting a larger pullback formatic, at least on the daily. The daily is oversold, but the Williams suppression, this is what we talk about with the Williams opening up here. It causes this stochastic to kind of meander, and you wonder, why does this not, it's oversold, why is it not going up? Well, there's other momentum indicators like the Williams which suppress the stochastic RSI. This is why we have it together, to kind of see if that suppression is potentially inbound. So it looks like that could be inbound on the daily time frame. We went over the idea of USDT dominance coming down, so people taking profits towards the end of the year, getting their books ready for the tax rebate, selling at a loss or in profit to get their taxes in order for the end of the year. Seems to make sense. The money flow beneath the RSI here on the 22 suggests you could get a curveball play to the upside, though. The 22-hour has a sleeper signal for that money flow to go up. Let's go see if there is something in this impulse from this level. If we use this trend-based fib from here to there, we're basically coming back to a 706 region. We came up to the 2 levels, coming back down on that standard deviation, possibly coming to the 706. Let me go ahead and make this from here to there. So within this impulse from this continuation point, you could be coming down into that 618 region. Wicking into that 618 would be something to look at. Right now we're holding that super trend on the 12-hour. What's up, kiddo? My kid's off from school. You want my coffee? I have my coffee. Thank you, though. They're off from school today. So the 12-hour also coming down to an oversold region on the 12. If you come to the 6-hour cross-up event, double bottom on the Williams, potentially getting a cross-up of the leading MACD here on the 6. If you get a 6-hour play to the upside, holding the weighted moving average here, the 200 weighted is a stickier weighted moving average here, which is what we use, why it reacts off of it a lot of time. So if we look at 200 WNA versus 200 SMA, so where is it? So there was a time where I went over the differences between, I back tested a bunch of EMAs and SMAs and found that the weighted moving average was more accurate than the simple moving average a lot of times. So that is why we use this 200 weighted moving average that it's bouncing off of. Weighted is weighted for price, so it has volume inbuilt into the weight, which keeps it stickier and it's more frugal in its levels than the SMA. So anyway, the 4 hour not starting to thin, but giving a slight curvature here on the 4 hour time frame. We have the cross-up event of the 4 hour here as we get into the nitty-gritty. And if we go into the hourly time frame doing the same as Link yesterday, broke through the cloud, possibly coming back to retrace this cloud on the hourly. And that would be a possible equilibrium bounce on that Matic on the hourly. Let's go look at the liquidity for Matic and see if there's anything to insinuate upside here. So they previously ate into the shorts. They had 159 million in short liquidity. As they broke down here, they decided to go up into those pools and eat the liquidity on that side of the equation. There's still more up in the 79-80 cent region that they could clear the range on. So I'm seeing the possibility on the liquidity to come to that 79.4 region, so possibly coming higher. My son's having a hissy fit right now. So possibly coming up to that take profit 1 region. So if it comes down to here, hits that equilibrium, you could be coming up into that 79-71 range level on Matic. The hourly is getting this possible dump coming, so watch where this alarm on the Williams goes. How far down do we go from here? Do we retrace to the equilibrium of the impulse? So far, respecting the bearish super trend from up here on Tuesday and coming down to the cloud. So if we come down to the cloud and you see the cloud start to shift around this equilibrium region, then you could be seeing this continuation up into the short pool for the tune of 5.55% perhaps. Ultimately though, coming lower on a deeper retrace zone, looking at the 12-hour time frame, coming down into here would be where the ideal swing plays would be found, down in this region. So for a scalp, that little move we just went over, but in a long-term play, seeing it retrace down into these order blocks or this range and SR flipping it at the 706 region. And that is my story, and I'm sticking to it for Matic. Hopefully that made sense as we went through the time frames. Anything else? Message retracted. What? Thanks for charting. Cool. What happened? I guess. Okay, so back to the Bitcoin. How does Bitcoin react from here? Same with everything, it's kind of retracing back down, looking for support into that liquidity. So where do we go from here? Let's go back to BTC and then wrap it up in a nutshell. BTC. So BTC has that $250 million character down at 36,667. 36,667 would put you about here. Let's see, 667. There you go. So there is a little bit of 100x pool to retrace into inside of this green vector candle. So coming down to that 706, in between the 706 and the 786 of this level, to gobble up some of this liquidity of the 100x longs seems to make the most sense to me right now. Coming back to that 100x pool would be a nice little ABC to the downside here, and then from there possibly taking it up. So that is my story, and I'm sticking to it. We'll keep it there for you and let you know how it plays out tomorrow. Trade safe, everyone. The hourly cloud kiss / 100x pool down here, super trend 1.6% away. Looks like the math has you at hello as well. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the